The broadcast is now starting. All attendees are in listen-only mode.
Test, test, mic test. Let me see. I think I'm getting green bars. All right. Thanks for the feedback, Grizzly. You're funny, Tiffany. You can handle the Grizzly. It's the ultimate list. It's the I can't even talk. It's the ultimate litmus test for a trader. Can they handle the Grizzly? Sound, sound. So how's everybody doing? What else do I need to see here? Need to get my attendee list to see who's here. Good turnout. Super happy and grateful. What was it Zig Ziglar used to say? If I was any happier, there'd have to be two of me. So, in terms of that, snowfall. Where's that? I miss my snow so much. Ohio. Yeah. Yeah, Minnesota. Got to go to Minnesota. It's my very lousy imitation of a Minnesotan. Yeah, eh? Got any snow in Minnesota, eh? I love our regional dialects here in the States. So yeah, so what you guys are encountering, and unless you're an active student somewhere, you forget that the learning process is not about, and this is why, in self-development, if you're really proceeding well in self-development and you take a 4-book strategy a month, one of those books should be a book you've read in the last 3 to 6 months. You keep cycling through them. First pass isn't going to do it. And, sometimes I'll mention a book and it's like, oh yeah, I read that. Well, you read it, or do you have the information from it stored in your memory? There's a difference. And so, this is why, as much as it's against the grain of what the trader wants, because the trader wants to be live trading and on their path to millions, I know that's the slowest way to get there. The fastest way to get there is to go slow. It's the old tortoise and hare. And we have people that'll come in and literally binge watch SFX 30 in a weekend, and then, okay, I'm ready for tab 29. And it doesn't work that way. You have to take action. You have to demo trade. I can't, I'm not around you guys in terms of everyday life, so I don't know, but I'm pretty, it's pretty revealing to watch Dallas as he's trying to proceed, as he is proceeding. And, he obviously he knows I'm available, so, but he doesn't abuse that. He'll go into his room and be gone for 2 hours and come out and, okay, Dad, I've gone through, Pitchfork Module 7, and he's got his notebook. And, he's got 10 pages of diagrams and pitchforks and questions. And, he'll sit down. You got a few minutes? Yeah. Okay. I had a question about this, had a question about that. Here's a diagram. I was trying to understand it. The enormity of his notes, but he's also a college student. So that's what he does. He's a student. And so he gets the process. He knows what you have to do to go through those courses where, a professor only spends so much time on one topic, and he doesn't typically, 3 weeks later go back and reteach a class. What he's gone through, what the book has done, that's it. And then they move on. There's just too much material in that, in a semester. And so you've got to learn to be a student. And in terms of trading, we forget that. I sure did when I was learning to trade. I was all ego filled and, I'm going to conquer the Forex in 2 weeks. And it just doesn't work like that. You have to absorb, put it to practice, go back, review, absorb some more. It's like one of those movies that you could probably see 3 or 4 times and you still learn something new in the movie. You still see something different or pick up a line that you didn't hear the first 3 times. Right? Yeah, well, lucky Dallas. The trouble is the bar gets pretty set pretty high for him too. And Dallas, I already told you that. We already answered that 2 weeks ago. So he gets a little bit more grizzly than you guys do. He gets a little bit more of the grizzly than you guys do. And then he's internally into the head game. He's got some pressure on him. If I can't get it, my dad's the coach. I'm really stupid. So, I just tell him, don't, as much as he's in a rush, don't be in a rush. You can't. You've got to be able to go through material. And, you got to realize in the Precision Traders group, the whole concept was you're going to go at an accelerated pace. I warned you that, And, we got, who's here today? Let me see. Tim Packus is here and Zoe is here. Richard's here. People have been around me a couple of years. They know the pace, and even at the pace they've gone, which is much slower, they're still review. Because what's the objective here? You got to program your subconscious mind. That's how your RAS grows. And you just have to understand in the midst of all that, you're going to have a sense of being overwhelmed. But you'll get through that fog. Trust me. That's why persist without exception is the mantra. As long as you continue to persist, you'll be okay. All right. So we've had the chit chat. I don't want to spend all our session just doing what we used to call Tuesday soapboxes. It's Zoe, Tim, Richard. The newer traders haven't had a lot of exposure to soapbox days. A soapbox day is somebody will bring up a topic and I acknowledge it's going to be a soapbox, meaning if you can't hang around 2 more hours, that's okay, but I'm going to go that long. And it's usually a blend of, it usually has a lot of philosophy in them. So they're fun, but they're long, which is why I don't like spending too many of them, because I do value your time. But they end up, I always get rave reviews for them. People generally like them. But I don't want that to be this morning for all our cases. We all have things to do. So let's get to our content today. So the content today, instead of being forward-based curriculum, it's going to be a little bit rewind and review. Okay. And so I want to talk about the MTFA, for those that don't know, is multiple time frame analysis. I want to talk about potential support and resistance. As a really subset of that, I want to talk about INS and the Hall. So that's the agenda for today. And that comes mostly from, comments and questions and things I've seen directly in the group and things I've seen indirectly. Indirectly means nobody's made a statement about it or a question about it, but it's obvious the RAS isn't tuned in to that area or that genre of what needs to be absorbed. Maybe it's I didn't teach it, maybe I didn't spend enough time on it, maybe you were blinking at that time that I did teach it, etc., etc., etc. So that's the agenda for today. All right, so the actual bullets then are there below in gray, or may appear as white. So the first thing I want to talk about is S&R is really PSR. So that's the first reality we have to know. Things that I really despise, and when I see it is, and that's partially a reality of having traded in the new paradigm, where we're a little bit more responsive and reactionary than we are forward in predicting and forecasting. And so this, the thing I have a little kind of like for is when you see somebody has drawn, pretty major support and resistance on a chart, and price action at that point might be like here, and then they come along and do this. And you've seen this, right? And so there's a couple problems with that. One, first of all, support and resistance, as I said, is not support and resistance. It's potential support and resistance. It's only support and resistance when it is, which means it can't be forecast. You can only tell in real time. Okay. Which means when you're here and you draw your yellow lines as, this is what price is expected to do, the separation point between old paradigm and new paradigm and that's because these kinds of words are triggers in your brain to your RAS and your sensory information gateways. So price should do this. I expect price to do this. I'm anticipating price do this. I believe this is what price is going to do. I think price should retrace and then go down further. So these become programming mechanisms for your sensory information gateway. And the problem with that is then you're defining, again, remember, your crew is the most loyal crew in the world. And so it's going to listen to that. and it's going to act accordingly because it is a loyal crew. So once again, pick any one of those words. If you're telling your brain that price should do this, remember why you have an RAS. Remember why you have a sensory information gateway. There's too much information for it to process. So it has to limit what it's going to screen in and screen out based on the orders you give it. So when you say, I think price is going to do this, I believe price is going to do this, I'm expecting price to do that, you're programming your RAS to now screen out information that should show you anything to the contrary. What's the oh my for? So those are programming words. And they're not, in the scheme of things, they're not healthy programming words. Oh, the list is longer. I'm just trying to hit the main, the main ones you'll hear and see. All right. Now, I'm not saying we don't want to develop a sense for analysis to try and get a sense of direction and what may be, but you give your mind that programming. It looks like price might do this, but I'm very open to see the things that would show me price isn't doing that. There you go. Well, catch yourself. Catch yourself. The easiest place to do that is to spend time in our group, look at other people's trades and the comments, and right in their write-up in the comments, you'll see these words. And very often the answers are right there. Trade, description, direction, time, entry price, blah, 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 pips, -4. Comments. Well, after the P1 did this, I thought the P10. See? And it may or may not have a 100% cause and effect on why you lost the trade, but it very often has a strong influence. Because you're programming your RAS. See what? And look, there's two kinds of understandings of your RAS in your SIG, your sensory information gateway. Remember, when you're not in the heat of the moment, we go back to Lori's law, because Lori's law, Lori really nailed it that day when she was talking about, I guess then the reality is the difference between a successful trader and not a successful trader is the successful trader can recall and apply all their knowledge, and here's the key, in the heat of the moment. See, when we're talking about this stuff, you're hearing me right now in your conscious mind. Your subconscious mind is hearing me too. But when you think about it, when you contemplate it, those conscious thought efforts in your brain, it's a lot easier to say, yeah, I understand what he's saying. The problem is that's much like the Tiger Woods 10 DVD volume set on golf. You can intellectually, you can academically understand it. That doesn't mean in the heat of the moment you're going to be able to go out there and do it. So the challenge with RAS, the challenge with the sensory information gateways, is very often we can intellectually understand what they're about when we think about them consciously. The challenge is in the heat of the moment, we have no control because over 98% of our thinking, is subconscious. It's automatic. We don't even know what's going on. And it directly controls our behavior and actions. So calm, heat of the moment, demo, live. They're two different things. And so we want to avoid these words because they do program our RAS. They program our sensory information gateways. And at certain time, they're going to program them harder, deeper, wider, depth and breadth to the degree of the order that you're giving your subconscious mind as to what to use to filter because there's too much to see. So obviously, if you understand that element, not just, okay, if he says so, but you understand how it works. Again, academically it's fine. You got to have the academic understanding. Rewind that tape. You have to have the academic understanding, the conceptual blueprint, if you will, before you'll ever be able to implement it. And it's not just, yeah, if he says so. That's no, you got to understand it. You know, you've got to essentially internally in that brain of yours, in that gray matter or pink, whatever color it is, you've got to buy into it. You have to understand what the sensory information gateway is and how it functions. And it's as strong an ally and friend and advantage to you as you make it. You're the programmer. No victimhood here. If you're hanging around friends who are negative, that's your choice. If you're watching the local news, that's your choice. I saw somebody in a traders group yesterday, talking about something. I guess it was, I don't even remember what it was, to be honest. And their comment was, that's why I don't watch the national news. I just watch local news. And I was thinking, oh my God, that's even worse. You think you're doing the right thing by avoiding national news because you don't want to hear you don't hear a lot of the politics stuff on local news. Well, not at the national level. All the stuff that goes on. But the local news is full of, murder and rape and car accidents and drug drivers killing people and. And so he's a trader and he's bragging about he doesn't watch national news. He spends all his time on the local news. I'm thinking, well, I don't know what your results are, but you're surely not helping your RAS and your sensory information gateway by allowing that kind of negative to come in. So with that said, do you understand, and this is a yes/no question, it's not rhetorical, do you understand that when I see people mark up charts like that, I shudder? Because it's a sign they're and I'll use a stronger word, they're ignorant of this whole sensory information gateway process. I'm not saying there aren't people that can't look at charts and do that, but now we're getting back to a 3% reality that's not duplicatable. See, it's not just you don't understand technically what they understand, but their sensory information gateway can be different than yours. But you will see this all day long. All right, let's get to the point I was trying to make here. I got on some slide teaching on sensory information gateway. The point being is if you zoom out a little and look back at these lines, based on time frame in most recent history, you then say, wait a second, how do you know it's going to bounce here? How do you know it's going to bounce here? How do you know it's going to go through it there on its way down? Because you look over on the left, and the very lines that it bounced from here are the very lines that it went through here. Oh my, price action bounced off it there. And then it comes through and it goes through it here. So what makes you think here it's going to bounce when right here in front of it, it didn't? What's going to make you think it's going to go through that support line at that point like a hot knife through butter when it couldn't here? So even from a technical perspective, these almost always are suspect because there's proof right in front of it. And that's why the reality is we can't call it S&R. Wayne, get it in the document. It's PSR. It's potential support and resistance. Because it may or may not provide it. The only time you know whether it's support and resistance is when it is. Again, it's like this is the guy trying to predict when the train's going to get to the train station from afar, and you're sitting at the train station. You know when the train got at the train station because you were there watching it. So instead of trying to predict S&R, we take an approach that says, we're going to respond to what market price does. Yes, we make some efforts at predicting, but the prediction we make is based on historical statistics. That's why we know at a convergence, price normally bounces, but we have plenty of times price snakes once it hits convergence because our indicator just can't go any higher or any lower. So price continues to slide. So even with the best of the best in terms of technology, multiple time frame, wave exhaustion, all synchronized at the same place, and yet price then continues. There's just more strength in all of them. The bigger move wants to go, the little waves will cycle with it. But yet it's not complete until all the waves converge, and then it will reverse. So even when you have something that's pretty strong, it's still potential. It's not it. So support and resistance is not it. It's potentially something. But when you take that potential and now you visualize it, plant it in your brain, and you hear others speak those words, see, it doesn't matter whether you speak it or you're watching somebody else do it. Oh, price should make it through this barrier, but ultimately stop down here at, 1.2891, for which it'll retrace up to this price, and then it'll drop down to here. That's what it should do. That's what I expect it to do. That's what you should anticipate it to do. And then what do you say to your trading buddy because you have a little bit of ego? Yeah, I think price is going to make it down to this level, but it's going to have a pullback in between. Now you're replanting that seed even stronger, and now you're like a contagion. You're spreading it to other traders. Shame on you. So understand support and resistance is potential support and resistance. Now, let's come back and think about this or talk about this in terms of multiple time frame analysis. Where am I? All right. So I've got the Aussie Kiwi here, something I don't normally have a chart for, so I put this up just to work with. And so I've got three charts here. Sorry for not putting the background on. A 240, a 30, and a 1. So what you have to understand about multiple time frame analysis is this. First of all, we got past support and resistance is really PSR. Support and resistance is PSR. It's potential support and resistance. So, good job. We got through that. Now, let's talk about the next. 4-hour support and resistance, that's because how it's taught, not relevant to intraday until it is potential support and resistance. In other words, most of the time, what you're going to see, if you're a beginner and somebody's teaching you support and resistance, is they're almost inevitably going to start out with a 4-hour chart. Some will use 8, some will use 2, sometimes even 1, but for the most part, it's a 4-hour chart. I would say over the 15 years of trading, that's what I see VMT the vast majority of the time. Educator comes out, they start on the 4-hour chart. Well, here's the problem. Unless you're going to turn around and learn 4-hour trading system, 4-hour support and resistance has limited use. It's only going to be support and resistance when it is at the time frame you're on. Now, I know that sounds a little like, what? But think of it this way. If you look at a 4-hour chart, which is what I was going to try and do, you look at a 4-hour chart and you plot support and resistance driven by what you see on that 4-hour chart. So price comes down, it goes up here, it comes down here and comes up and checks it and drops down, and then it comes up here and then it drops down, bounces a little again, and then comes down here, little bounce, comes down. What you're going to end up doing with that, or what a teacher, educator is going to end up doing with that, is they're going to say, well, let's find the touches where price bounced. All right. So, there's a support and resistance line. If I'd drawn this straight, we'd see, well, look, we got support and resistance, tops and bottoms. Hey, look, we got another support and resistance line. Come down here, this bounce. So that now becomes our projected support and resistance into the future. And it's hard to disagree that in the process of what you're looking at on those charts, that those lines didn't bounce price. They did. It bounced it here, bounced it here, went through it, but it came back and bounced it here, bounced it here, bounced it here, came back, bounced off of it, bounced it, and bounced it. And while those lines shine nice and bright, here's the problem with this, as we've said already, is, well, what happened here? It was support here. I've got a line here now, but it didn't support it there. Price went through it. And yet right after that, oh, well, look, it's resistance. But there's an example of where it didn't do anything. There's an example of where it didn't do anything. There's an example of where it didn't do anything. So even at the 4-hour level, once again, it's only potential support and resistance, and it's only support and resistance when it is. That is a resistance point because it bounced the price. Real time, it was. That doesn't mean it's going to do it again in the future. It only has a potential to do it. It doesn't mean it will do it. We got that? Are we on the same page? And this is where you get messed up, because the things that might show you it's going to pass through, i.e. maybe some indicators, they're saying, well, I just don't see anything stopping it based on the indicator. But you're not looking at that because you've already seen a map where, oh, look, it's support and resistance. So when it gets there, I better exit the trade. I better do this. I better do that. Again, and those actions come from your SIG. Because you already believed that red line was support and resistance. You already thought it was. You already anticipated it was. You already expected it to be. Price should bounce there. All that programming. All right. So now what we want to do, because we want to talk about 4-hour support and resistance, is not relevant to intraday until it is. So we're going to zoom in on this chart. Let's zoom in right here. All right. So we're going to zoom in on that. But now we're looking at a 30-minute chart. And wait a second, when we looked at the 4-hour chart, those bars, those lines look so close together. And now we see they're, 150 pips apart, 175 pips apart. So all of a sudden at a 30-minute level, you're not going to have that much difference at the 15. What does support resistance line number 1 and support resistance line number 2 have to do with my 30-minute trading? Because all we saw when we looked at the big picture, remember, price was supposed to go from here down to here. It should do that. We anticipate it. We expect it. I believe, because that's what the diagram said. So intraday is not relevant to 4 hours, or 4 hours not relevant to intraday until it is. In other words, if we leave here and the anticipation is for it to come down here, there's nothing in between to block price, to turn price, to resist or support price. Nothing in here. Because at the 4-hour level, again, your goal is from here to here, which is why you have to tolerate and maintain huge stop losses. Because nobody says if it's leaving line 1 and going to arrive at line 2, nobody is saying price cannot do this. Because your targets are that big and apart because you're on a 4-hour system. Or you're looking at 4-hour support and resistance. So when you got down here and you pulled back here, that very well could be, based on the scale and the fact that I said it's 170 foot, that could be a 75 pip pullback. Or larger. That could be a 100 pip pullback. Which is why you have big fat stop losses, because you're going from here to here and you have to allow for that to happen if you're going to get down here. And while I draw that in somewhat clear fashion, the reality is the path it can take can even be more exaggerated, not in terms of distances, but just the opportunity. In other words, maybe it does leave here, come down here, go all the way almost to the support, but it doesn't, or resistance doesn't hit it, and then comes down here, and then makes a couple of waves here, and then big steep move, and a correction, and another pretty aggressive move, but then it corrects way up here. Nice little W in there, might be a harmonic pattern, comes down. And maybe it doesn't tag it there. Maybe you have a little bit more room. So the problem is, or the challenge is, there's actually one in front of it, right? Another W. The challenge is when you are looking at charts based on your lifestyle, your time, your system, what it is you're trading, that's a 30-minute trade. Or a 15-minute trade. That's, a 30-minute trade. That's 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 a 30-minute trade. I think you get the deal here. So what good does support and resistance line number 1 or support and resistance line number 2, what good are they for your 30-minute trading? What good are they? Go ahead and type it. See, when you type it, you're doing something with creating a synapse. Yeah, they have nothing to do with it. The only time it's relevant is when, wrong one. The only time it was relevant is when price finally got down there, and guess what happens? Your 30-minute trade that we talked about also ends on the same place your 4-hour trade ends. So the only time 4-hour support and resistance is relevant to intraday trading is when it is support and resistance. But the space in between, it doesn't serve you. It only, see, it's old paradigm all the way, because it's a big picture measure, and therefore, as I've illustrated, you have to have big stop losses to allow it to go from one target, if you will, one support and resistance area, or also frequently how are support and resistance drawn, which makes it even more fun from a precision standpoint. They're drawn as zones. And even at the 4-hour level, I've seen these zones draw to be as big as 50 to 75 pips of a support and resistance zone. So yes, this would be a good example right down here at the very end. That would very well, somebody's pointing out in a, I'm going to use a different color. If you were looking at, if you're looking at that in a multi-wave, that would be what? We started up here at the top at the 4-hour level, convergence, and all of those in between were 30-minute convergences. And the only convergence that matters where the 4-hour level is at play is when it becomes a 30-minute convergence. But there's tons of pips to be made in those pullbacks that the 4-hour trader has to endure in order to come down there. There's plenty of pips there in the contra move, not only the original move down, but in the move back up. There's plenty of pips there in any one of those moves, up or down, to make you a millionaire. You have to understand where these 4-hour lines are, though, else you could take a 15-minute trade right into them. Well, for sure. What do we say the first thing you do on your charts? What do you sit down and do for your chart setups? 4-hour FIBOs. It's the first thing I always teach you to do. You do 4-hour FIBOs and bring them down, all the way down to your 1-minute chart. But guess what? In a 4-hour stretch like this, you know, in looking at what you're seeing here, because we zoomed in, here is your 50% FIBO at the 4-hour level, and here's your 61.8. So you have to be aware of where they are. But the only time they're going to be of significance is when it is at the same time this, a yellow line, which represents your 30 or 15. See, there's these yellow lines all over the chart. That's your intraday support and resistance. Is a 4-hour trader interested in them? No, because they're taught big stops. They're taught to go from line 1 to line 2. Sorry, I don't have my... They're taught to go from line 1 to line 2. Anything in between is not relevant to them. You're interested in the things that will affect the time period trade you're dealing with. And there's only one spot that's going to be. Well, two spots if you look at the chart. You're going to have where it bounced up here, where everything bounced up here and converged, and where everything down here converged at the 4-hour level. 4-hour support resistance at that point becomes 30-minute, becomes 15-minute, becomes 1 minute, because that is the multiple time period synchronization of all the wave exhaustions. The 4-hour trader can care less about 30-minute tops and bottoms and 15-minute tops and bottoms, and in this move, the 582 1-minute tops and bottoms. None of those are relevant to the 4-hour trader because he is simply going from up here to down here. And he has big ass stop losses to allow the price to pull back and come back down. But how relevant then is those time period, those 4-hour support resistance lines? They're not. Now, without doing your 4-hour FIBOs, the question was, do you have to understand where these 4-hour lines are, though, else you could take a 15-minute trade right into them? You wouldn't. You couldn't. Why? Not as a tab 29 trader. See, what I'm saying there is, let me draw you another. Now we're looking at tab 29. And we're zoomed in on a lower level chart, 10-minute, 1 minute, doesn't matter. And I'm seeing my 4-hour wave, long stretch, way down here. And I'm looking at my 10-minute level. And again, we have zoomed in, understanding what's going on. When it's close but not down there, i.e. you have this condition, yeah, I want to be careful about doing a buy when there's such downward pressure. Why? Well, first of all, think about what you know. Down with strong pressure is what? Sell tops. So even though there is a convergence here, when the 4-hour wave is that close, I'm not going to go against the trend even though it shows it as a convergence. Yes, your ideal way of dealing with this then would be, a sell into the buy opportunity. Because whether I have a trend line or not, these turnarounds, lower highs would be a good indication. Or maybe this one is actually higher and I have a divergent situation where price is obviously dropping, but these two are rising. So almost either way, I can always take this last trade. So you're not trading blind with tab 29. Forget that stuff. See, that's the mindset. That's old mentality. That's old paradigm because you don't know what's going on in real time until it happens. Here we can see the micro moves in that 4-hour move. So it's not so much you have to understand it, but if I'm looking at my 1-minute chart, I will see as I get close to this 4-hour convergence, if that 4-hour support resistance zone is defined by a FIBO, that's how I'm defining it on my charts. Well, I'll see that line. But guess what? When my screen view is in this area, I don't see that red line. It's not part of what I'm dealing with. It's not relevant to me. As this screen view slides down, eventually, oh look, the 4-hour resistance line or support line shows up. In between that, it has no relevance to me. So it works both ways. The 4-hour trader does not care about anything in here. He's going to sustain the pullbacks unless he can't. You know, he's going to sustain the pullbacks. Hoping his support and resistance lines are the right ones. And he'll have the 7,500 pip pullback. And he's got to stop to afford it. Because he only thinks one thing, the 4-hour picture. Intraday trading, you're taking advantage of every one of these little plays. How many of you have ever seen, you see a scan and you're looking at your 15-minute chart, right? And if you look at the web scanner, here's your field of view. All right, whatever indicator down here, RSI, stochastics, RSI, etc. There you are. That's what you see at 15-minute level. And then you go out at the 4-hour level. And lo and behold, because you're trying to draw a pitchfork at the big level, there's your scan. If you've not seen that, you need to do it sometime. Look at your 15-minute scan, put it on your trading view charts, right? And yet, so there's your 4-hour look. And here's your 15-minute look. In the scheme of things, how relevant are those swings, A, B, C, D? How relevant are they to the 4-hour trader? And yet, oh my, here's a 15-minute scan where the CD leg is 120 pips. And then we could put a Charlie Delta on that and an X-ray alpha and get all sorts of pips. From the Charlie Delta and the X-ray alpha. So not only, it goes both ways. Not only is this not relevant to the 4-hour trader, the 4-hour trader's lines up here and down here are not even visible on our chart. So this connection has to be made. I get frustrated when I see a brand new trader learning support and resistance and somebody takes them to a 4-hour chart to show it to them, and then they turn around and say, oh, use the 15-minute scan. %90 of the time, the 4-hour support and resistance is not relevant. So get that into your head. Which means if you do 4-hour FIBOs, all you're doing is showing where the 4-hour big turns might take place. But for the intraday trader on a 15-minute chart, on a 30-minute chart, you're not going to see those except once in a blue moon. Once every what? Maybe 2 to 3 days, unless there's some big, announcement move, whatever. There's no relevance until they're relevant, meaning until price action gets to that line or to that line. Until then, 4-hour support and resistance means nothing. Now, I want to backtrack on something because I get quoted out of context all the time. I just said 4-hour support and resistance doesn't have anything to do with intraday trading. It's also the same reason why 4-hour traders use very basic FIBOs, because it will confuse them to have smaller time frame, more Fibonacci values. It will confuse them because then you're drawing lines all inside their 4-hour space. So in other words, if this was indeed their 38.2 and this is their 50, they really don't want to see much in between that, because how do they deal with it then? If they've already mapped out this is the red line, that's your support and resistance line, and the next one down is down here, they can't process, they can't deal with information in between, because it would be a conflict to say that could be a 4-hour point and that could be a 4-hour point. And that could, because they don't have the details, they don't have the indicators, they don't have the crap to deal with that. So when I finally teach, our Fibonacci class, and you look at the stuff I just talked about, between $38.2 and $50, there's plenty of things that could turn price in those zones. They don't want to know about it. They don't want to know about the 441 or the 447 or the 481 or the 486. They don't want to know about that, because it'll blow their mind in terms of their 4-hour support resistance. So, when I show my Fibonacci's to somebody that's not in the Scans, Forks, and Fibos group, to somebody that's not intraday trading with precision, they're going to laugh, because, what they're going to see now from their perspective at that 4-hour level, where they had that line and they had that line, whoops, and they understood with their big stops, that they're going to have big pullbacks. They have to allow that. But the only support and resistance they see is here and here. Line 1 and line 2. And if you all of a sudden hand them something that says this, they're going to freak out, because they're not supposed to enter and exit except on line 1 and 2. And if that's the case, then what are all these other lines? Well, they're actually what occurs in any size move from a fractal perspective from 38.2 to 50. They're in there, all those numbers. So you really have to understand this. 4-hour support and resistance not relevant to intraday until it is support and resistance. Intraday support and resistance is not relevant to 4-hour until they are the same, meaning this point and this point. But that whole stretch in there, intraday is not relevant to 4-hour. Are we good on all that? Makes sense, right? This isn't theory. This is reality. All right. So if you got that, then you have to understand this next one. 1 minute support and resistance does not end a 15-minute, 30-minute, 240 trade until they sync up. That's essentially the definition of harmonic wave convergence. But if you're trading at the 1 minute level, here's an example. And I see this all the time. So you say you got all this up here, but yet you're operating in conflict because you don't get that the 1 minute doesn't end the upper waves until they sync up. So I'll see somebody in a 30-minute trade, and they're at 17 pips, and they exit. And their answer will often be, when I say, why did you exit there? Their answer will be, oh, the 1 minute was at the extreme. When, in order to get the 17 pips, the 1 minute had already been to extreme 3 times. So it's not, you can't have the 1 minute extreme end a 30-minute trade unless it's one and the same in terms of multi-wave. This person has a little bit of RAS. They forgot about, oh, down here they entered the trade and they had their 10-minute convergence, and they had their 1 minute convergence. And yet at the time, they're exiting the trade, it's because, oh, the 1 minute wave was at its extreme. Well, just remember what we just did up here. That's not relevant to your 30-minute trade until your 30-minute wave is all the way at extreme. Then that particular 1 minute extreme, yeah, that's a good reason to exit. Well, semi-good. So if you get intraday, if you get 4-hour support and resistance is not relevant to intraday support and resistance until it is, and you get that your intraday support and resistance isn't relative to the 4-hour trader until the intraday support and resistance syncs up with the 4-hour. They're two separate entities. So you can't just in the middle here say, you've got to be able to extrapolate that, take that and bring it over to your 30-minute trade and realize, your 1 minute is exactly the same. It has the same relevance to the 30. What the 1 minute does is not relevant until the 30-minute until they are one and the same. So this is not an exit. Don't let your RAS convince you it is, because what's really happening there goes much deeper psychologically. What's really happening here when you exit this trade at 17 pips and you're exiting, and I ask you why you exit, and you say the 1 minute wave is extreme, is that a technical answer? It is, but it's not there as I just showed you on the charts. It's not relevant to exit on a 1 minute extreme in a 30-minute wave until the 1 minute is the 30-minute extreme. So where's that answer come from? Fear. You don't believe you deserve any more pips than that. It's a self-worth issue. Your subconscious says, I don't deserve more than this. I need to get out of this trade. No, they exit. They exit. Well, it's the fear of missing out on the pips they already have. It's not they're staying in to try and get more. They exited there. And it's really about, I better put this in the bank because I don't see this very often because after all, I don't deserve 25 and 30 pip trades. I had quit for the day last night. It was a long night. I had a session last night, IML session, and then I had to, I'm so deep in behind. I still haven't caught up from Christmas and being sick. And so I was just working. And I finally, about 10:30, 11 o'clock my time, said that's enough. I needed some separation between the long day and going to bed. I'm just the person that needs that. So I turned on the TV and I had DVR'd the last few sessions of the Blue Planet. I guess it's a National Nat Geo special or series that they're running right now about the oceans. And I was towards the end of 30 minutes there. There you go, Michael. Why am I worthy of mega pips on a daily basis? See, you can cover the worthiness issue by just talking about the pips. Why do I get, see, you're already saying it past tense, why do I get mega pips on a daily basis? You're already overruling the self-worth issue when you do that, but that's a good affirmation. Good to think about just turning it around and putting it into an affirmation. But that's why you stop at 17 pips. Anyway, get back to my story. So it's, it's late, it's 11:30, whatever, and all of a sudden I get a urgent Facebook message. Somebody in another time zone. And, Steve, I'm 100 pips up. I'm 100 pips up plus in a trade. Which hole should I be on? So there's a trader that has dismissed any perspective of I'm not worthy. They're not being greedy. They're looking for sound technical advice on what to do because they feel they weren't prepared to deal with it. But let me tell you, you don't get to 100 pips in a trade without being tempted many times to have quit the trade with the pips you have. So a lot of traders will say, why don't I ever get the 50 pip trades? Oh, you haven't been singled out. Oh, it's not because you don't have the technical ability. It's a self-worth issue. And the way that manifests is your self-worth is part of that programming in your subconscious mind. And guess what? Your crew goes to work on what you believe. So at the subconscious level, if you don't believe you're worthy of it, your SIG is not going to show you the things you need to see in order to stay into a 100 pip trade. This is why you got to do the head work. This is why you have to do the self-development daily. Back to Zig Zig. That's why you bathe daily. Yeah, you had a bath yesterday. You had a shower yesterday. You can't rest on your laurels. Oh, I did self-development last week. I'm going to take a break this week. Well, just go without a shower for 7 days. See how many friends you have. See if your spouse or children want to be around you. You have to do your SD day, self-development daily. Well, you take a day off. And there's, shake it up, diversify if you want. Don't just sit there and read. Watch some YouTube videos, get a CD, do an Audible, mix it up a little. Don't let it become a chore. It should be exciting. You should feel such growth and maturing on that sense. I mean, I don't want to get soapbox because I'm already running late, but, you do self-development and you do the 4 books and you add the pages before the next month gets here and you decide how many days you're going to read. Look at your calendar, put some practicality to it. Okay, I'm going to read 20 out of the 31 days. So divide your page total by 20. Now you'll know what you have to do each day. Get those 4 books in. I haven't seen anything about it, Wayne. Maybe I missed it. You need to put up more notices or ads. Anyway, think about 3 years down the road. I haven't seen it. I'll be there. I'm sorry. I just, I didn't see it. If you read 4 books a month, 4.2, 4.1, 4.5, that's 48 books a year. 3 years, 150 books in the self-development field? Your understanding of yourself is going to be immense. Your understanding of the way you work, your head works, is immense. And what if you did that 4 or 5 years? I mean, you're talking hundreds and hundreds of books of knowledge. So a lot of the technical stuff is not relevant if you don't have a mindset that says you deserve success. It doesn't matter how much you study the technicals. It doesn't matter how many times you watch the videos and what copious notes you can have. This is why self-development is important. And I could see it right away because I'll see things on the chart and that trader keeps doing the same stuff. And then I'll see somebody get a 50 pip trade and I'll go, why can't I ever get 50 pip trades? Because you don't believe you should. That's why. Your crew is doing exactly what you told them. Zoe's in her 3rd year of 4 books a month. Yep. Leading that pack of traders, the old FX group. So, okay, so now we got down to it. 1 minute extremes don't end 4-hour trades. Pretty simple. All right, let's talk about INS and support and resistance at the intraday level real quickly. There's been some questions about that this week. So I'm going to put INS on here and shadow bands. Let me turn shadow bands off for a minute. And you'll say, well, wait a second. Why is all of the activity down in here? Real thick. There's a few stuff up here and there's a few stuff down here, but it's real thick in here. Well, your INS system that's on your charts is truly intraday. And what that means is, the 1700 is the day marker. You can see at the bottom. And if I go back 24 hours, you'll see 1700 again. So I want to zoom in to just the last day and today. For those with bad eyes or not so good eyes, there's those day markers. So what that means is everything you see on the chart right there is only relevant going this way, with the exception that you have the reality of Fibonacci and reverse compliance. But the reason they're only good from 1700 New York last night is because they're calculated based on the data in here. So information about the day's high, the day's low, the day's close, all of that gets cranked through various formulas depending on the support and resistance system that you're talking about. And you'll see things on the chart, don't you? Anybody want to guess what this is here? Yep, you got it, Wayne. Anybody else? Yes, Richard. This just comes from learning, the colors we've assigned to the various subcomponents. It's not a FIBO. These are not drawn FIBOs. These are lines from yesterday. Yes, Mr. Tim Packus. So those that have had exposure understand that is the DC 45. So if we open up our support and resistance, our INS system on the charts and format it to look at the formatting of it, you'll see all these various components. Here's your harmonic targets. It shows the 1360 Q cross, your harmonic target 21, 34, 55, all the way up, at least as far as we deal with them. Then you get into various components. Here is your DC 45. We've always historically just used yellow for it, but right here. The DC 45 is something that you get to take advantage of because I tutored you. And it's not because I'm great, because I didn't know what it was. But I have a friend who many years ago I met when I was chasing down what the Forex is. And I used to do a lot of work with brokers in my past in supporting brokers with financial software, though I knew nothing about trading. And I became good friends with several of them. And so when I finally came back to the currency market, I went back to them to see if they were still trading or acting as brokers. Not the kind of brokers you're thinking of, but true traders, and who had a broker license. And one, we had a lunch one day up in Manhattan, and I said, any secrets you can tell me about, any just, hidden gems that nobody knows, that no other Forex trader will know? And he goes, yeah, I'll tell you one. There's a little hidden secret that inside traders, institutional traders know. And that is that regardless of the scale you're talking about, regardless of the previous day's moves, big, small, indifferent, that into the new day, that there will be a 45 pip line from the previous day's close that will be hit in one direction or the other. Sometimes it's close, and here's an example of where there were two hits directly to it. No doubt price recognized it to the pip there, and off a pip or whatever there. So that's the DC 45. So how you deal with your INS is pretty simple. This is how I deal with it. Let's go to the input mode. And we have groupings of subcomponents in the INS. You have your harmonic targets. That's based on the 1362 cross. You don't need to worry about the 1362 cross right now. We're not trading that. I talked about the 62 and what I used to do 15 years ago, 13 years ago. That's not what we're doing right now. So you don't have to worry about the logistics of the 1362 cross. You can surely put your 13 EMA and your 62 EMA on your chart, 30-minute chart, and see where the cross appears. But the calculation of 2134 in the direction of the movement is done automatically for you based on every cross. That's why you paid for this, is because it took programming to do that. And in TradingView, it was a little tougher than other places. So all that's done for you. In other words, if I take off everything else and leave just the harmonic targets on the screen, there they are. So price is moving down. And right now, this is one of those moves down where there's not a whole degree of compliance. There's one spot where we would have had a great trade with harmonic targets. See, remember, it's not SNR. It never is, never was. It is PSR. Which is why when you combine any of the subcomponents of the INS, when you combine that with tab 29 down below, now you have something that is solid. This should be a convergence or something real close to it. It very well may be. I would almost bet this would be a scenario down here where this was a convergence, and in the indicator, this one actually went lower, which gives us our divergence, and we have a harmonic trade. There's your W. And because it's divergent, and because it may or may not be, well, in this case, it would be a lower convergence point, even though this price is higher. Would look a lot like a wave 2, even though it's not. It's some sort of complex correction that has a W in it. But nonetheless, you can see that. You can see where that particular target, that particular subsystem had a good hit. Now, just for fun, I'm going to take it off for now. And so we should have nothing when I hit the OK button, but I'm going to put the cam lines back on. So we're going to put on our Camarillo lines. Camarillo lines, again, are calculated and put on the chart from 1700 forward based on the previous day's data. Okay, guys. And you can look at some of them where there is pretty strong compliance, and you'll see that's what there is. Some days, price movement will be 100% driven by the cam lines. You will see 3, 4, 5 lines bouncing price. Other days, hot knife through butter. All right. We then have these are PSR. They're support and resistance. They're just different. In the past, expert traders, 20 years of advice, have designed systems to trade. And the Camarillo lines, are that. Remember, you can turn on the line label so you can see which these lines are by name. DC 45, we already talked about. It's going to generate 2 lines. The middle line is the daily close. And then from that, support and resistance. You have FIBO pivots. So a lot of people you'll see trade pivot lines. We had standard pivot lines on our charts for many years. We learned about FIBO pivots, and so we moved to FIBO pivots because they had much more accuracy than standard pivots. They apply a Fibonacci to the formula. And so now you can see some interesting things here. So from a FIBO pivot perspective, boom, there was a touch. This is, in the world of harmonic wave convergence, these are what? 5 pip channels, so that's close enough to be a trade. Here's it to the pip exact. So there could be some trades there based on FIBO pivots. And then lastly, we have just a subsystem I created. Again, a little hint from an institutional trader called the DP30. And again, like any of the other subsystems, some days it has compliance, some days it doesn't. So here's how you trade this. Here's how you can use your INS system. You don't want to turn everything on. And put your shadow bands on and try and trade that. I see some people trying to do that. Again, depending on your trend moves, your shadow bands are the shoulders on the road. The road is the 62 EMA. And you'll see at various times, various levels of compliance. You'll see zones like this sometimes where two bands will totally direct price. They go in spurts. Nice single touch to a 21. These run nonstop, so you can go back. They're based off, the 62 here. So, nice, beautiful hit right here. That's going to be a trade. That's going to be a trade. That's going to be a trade. So, again, it's not about, oh, look at all the time it doesn't hit. It's about the time when it does hit. Now, if this hit down here is coinciding with a pitchfork parallel, and I'm having a 30-minute tab 29 convergence, see, that's how you use that trade. That's how you can use the shadow band. That's going to be a good trade because you've got an energy point there created by the pitchfork and that shadow band at the time of convergence. So how you would use this, let me go back to that, is simple. You have both your INS and shadow bands on your chart. And you have nothing on it. You don't turn anything on. 30-minute trading, right? I can zoom in because I'm not that interested in what happened yesterday. I see, we had a long period of consolidation for which we broke out. I mean, most people should be able to see that. Right? Elongated correction, finally broke out of it. Now we're hooking back up. Like I said, maybe that was a great pitchfork trade there or whatever. But what I'm interested now, why don't I want all the lines on my chart? Because it's too confusing to my head. What I'm interested in, as price is making its way up here, what I'm interested in is what the heck might stop price, what the heck might make sense in terms of harmonic wave convergence up in here. So now I could bring my INS up, and instead of having everything checked off, I can just go, I can selectively, this is why it's so nice, this is why we designed it this way. So you have that panel on your screen. All right, harmonic targets, okay, let's see it. Oh, got to turn them on. Have a good day. Drive carefully.
I'll try.
No, do. See you this afternoon. So I have no, we haven't had a 1362 cross up yet because I still have red lines. If I had the 1362 on my chart, I would know that. But I'm just saying here it's okay. I haven't had a cross up yet. Down lines can be support and resistance in an up move. So I at least want to see where they are. Nothing in the very short term. Okay? Okay, so I know where that is. Cam lines. Where are my cam lines in that area? Ooh, got a whole bunch of cam lines in there. And that's because why? Why is it so tight? Why are the cam lines all gathered together in one little area? Because they're based on the previous day's ranges. Yeah. So you're not going to have a whole lot of good reads on cam lines. I'm not saying they're not going to be effective, but there's not enough separation for me to put a lot of strong belief in the Camarillo lines the next day. You can go flashing through this little panel as often as you need, but it's better not to have everything on your chart all at once. My DC 45, let's make sure we know where it is, just to make sure, So one thing I would probably note on my chart, and I would do that how? With a line. I'd do it on the chart. I'm not going to do it, but I'd have a line, and I would make it yellow. Doesn't need to go across the whole page. I just leave it there. I know that line predominantly by itself means DC 45. So these are half-hour candles. It's not like I've got to get this done in 10 seconds. I'll take my DC 45 off, not to confuse my page. I'll put on FIBO pivots. Again, don't expect a lot because yesterday's range was pretty tight, but there are a couple FIBO pivots in this area, so I would probably draw them. Move on. See where my DP30 lines are? There's only one, but it's of interest because it sits right on top of one of the FIBO pivots. So I would want to note that. I don't have purple why you do on your charts. They sit on top of each other. And I'd get those lines as close as I can to each other, but separate them by a pixel so you can at least see the two lines. And then lastly, so I can go back to my INS, and now I can take everything off, still leave it, available on my chart, but I don't have anything checked. And then I could go to my shadow bands, and I could look in that zone. I can't expand it and have my box, these lines aren't relative anymore. But I can see, we've got the 62 coming in here. It's already past a point where it might have had relevance, and by the time this came out, but I'd say, look, got to watch out. Here's my 62. Got to be prepared for a bounce. And again, you can look to historical compliance with shadow bands in the immediate day, and there were some good touches in here. Early last night, here's another one. Not so much in here as we bouncing away, coming back to the 62. These are spread out, for bigger pippage between them as we move down. So, I can get a sense for that. Now I can have that off my chart, and I can look at any pitchforks. I can have my FIBO work, and now I'm looking for places of multiple hits in that block where a price may be going, and I have plenty of time because these are half-hour candles. All those lines that I draw here, I have visibility on, so I can see them down at my 15 and 1-minute levels. So the INS is just a number of individual, really strong support and resistance systems that overall, when we group them together, we call the INS, Intraday Navigation System. Those lines are not going to show up with 4-hour support and resistance until they are one and the same. You might not even have 4-hour FIBOs. Well, you will based on how I've drawn this chart, but if a 4-hour FIBO at one of the levels we have, of which there are many, lies on top of any one of these existing lines, you have a superset of support and resistance. It becomes whatever you want to call it, a potential reversal zone, a high probability reversal. Jim Kane, Scott Carney calls it a PRZ. Jim Kane, king of Fibonacci, he calls it a PRA instead of a PRZ. Same thing, he just didn't want to use the same terminology as friend Scott Carney uses. So instead of calling it a PRZ, he calls it a PRA, which is a potential reversal area. I don't know, area zone, one and the same to me. So immediately I had consolidation, price dropped. I draw a pitchfork for the drop. First thing I'm going to look at is that big wick on the current candle. It's kind of a sharp and shallow fork, but I do have a nice hit right in here if I keep it there to the wick. So I have a median hit and outside hit. That might be one fork I keep. If I go to the bottom, do I get any nice median hits or other outside the hits? Not really. So my initial inclination is to leave it there. So I don't have any direct hits inside the fork, but what's that mean? I now come in here, whoops. I can now come in here and turn on, some warning lines. And again, if you think the pitchfork chart, if the pitchfork is too much for you on your screen, you can take it off, or you can copy the lines. Now I've got some timing lines because, again, a diagonal crossing a horizontal is an energy point that only one candle can hit. I'm already beyond this point, so this double line here, FIBO and a CAM line, or FIBO and a DP30, not going to happen on this pitchfork. So I can expand this a little wider to see what may happen. Maybe price goes sideways and I hit it over here, as if I had a bigger side on that triangle, or rectangle, sorry. So that might be an interesting spot to watch as price continues to move up. So I'm just trying to do things, to in where price is about to go. And again, you got plenty of time because it's a 30-minute candle. And I'm looking for double confirmations. I'll have my 30-minute Fibos on here. All right. Questions? So that's the INS. Don't worry about the individual nature. How are Fibo pivots calculated? What's the Camarillo line? Who invented it? How's it work? It's a support and resistance line. How's that? Forget the fact I spent 100 hours on it. Just love me for it. So we look, see, in the early years, we looked at intraday support and resistance, all the systems that are out there. And we either used them and proved them, which is why they're still here and part of the INS, or we found something better. In the case of pivots, we found Fibo pivots to be more accurate than standard pivots. What that means is when normal pivots showed a reversal, the Fibo pivot showed it too. But the normal pivots didn't give us extra trades that the Fibo pivots did. So ditch the pivots and go with Fibo pivots. Once you're authorized, the INS is part of the stuff you're authorized for. It's one of the many things we have. Same thing like moving averages. Where are we on time? Yeah. I'm going to hold off on the haul. We'll talk about the haul Thursday night. And that way I'll give it the time it deserves. Any questions about anything we covered today? So we talked about multiple time frame analysis. Well, we didn't. We talked about it in terms of support and resistance. We'll talk about multiple time frame analysis in terms of trading when we talk about the haul. We talked about 4-hour, larger time frame support and resistance is not suitable for intraday trading because it's too big. It's too far apart. Conversely, we talked about how intraday trading isn't relative to a 4-hour trader. We reviewed our INS system, one way to use it. What I do is not necessarily it, but I like it. I like looking at the zone of where price should be going. Don't take that into, the connotation that I'm making predictions. I'm just saying, where's my immediate candles? And if they continue up, where they may go. I'm not going to worry about it reversing until it gets past the current low. So plenty of time. Well, so there's a question. Great to see that we should do all this before looking at tab 29 or indicators. Yeah, because look, here's a good place where this will help you. And some of you have been struggling with this, and I say, look, just go to other stuff. Right up here at the top, that's a challenge. Which one of those convergences, really is going to be, I can go -3 quite a bit. That's why I say find something else. Trading into an existing convergence is challenging. When I put the 10-minute wave there, yeah, every one of these becomes a buy into the sell. I don't need scale on that because the 10-minute wave is still snaking here. So I can take any one of these buys into the sells on the hook back. But in terms of the convergence move, which one of these? Well, if price is pushing its way up and pushing its way up, and finally, I'll make it blue, and I know it's not the easiest to see, but just to, price is pushing, 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 and it gets to this line here, and it's a triple line. Oh, it's a pitchfork warning line. I got a FIBO pivot. I got a DC 30 line right there. Hey, guess what? That separates that particular 1-minute convergence from all the others. You might be pretty gun shy about taking this one because it's 5 pips away from a triple line. No, it's actually the kitty. She's sitting right up here. If you don't hear her purring, you'll often hear her stomach growling. She's like a little baby. She's very petite. And she's not the cat that you put the bowl out at 5 o'clock and she's good. She'd rather eat 10 little crunchy bits every 30 minutes. She's just like a baby. You feed them, they empty it, they're hungry. She's, it's the same old deal with every cat. They're as they get older, they're sleeping, they're eating, or they're out back pooping. That's their life. Except Callie, she likes to interfere when I'm trading and talking. So it's just a good idea to see where it's going. One last thing, and then we'll call it a morning. This is one other multiple time frame perspective that sometimes people lose sight of. So I'm on my 1 minute chart. Price action. Here I am, real time. Does that end my buy? If yes, why? If no, why? So here's what you're missing. So you had, there's some good comments here, but there's something a level higher. There you go, Wayne got it. What time period am I trading? I said we're on a 1 minute chart, but what time period are we trading? Is this a 10-minute trade? Is this a 30-minute trade? Remember, in a 30-minute trade, we are going from here to here. Let's just, Elliot, wave it up. I'm going from here to here. Who cares about the 10-minute waves along the way? They don't end my 30-minute. Oh, here's a 10-minute wave at its top. I guess I better exit my 30-minute trade. Nonetheless, do you care about where your 1 minute trade is? Look, that's ending a 1 minute trade. 10-minute convergence, that's ending a 10-minute convergence. Finally, down here, yes, if this was a 1, 10, 30 convergence, this would end my 30-minute trade. That would be this guy over here. If this block was this guy over here, it means nothing in terms of my 30-minute trade. It means nothing even in terms of my 10-minute trade. But yet I see so many of you having a 1 minute trend line and you exit here for whatever reason. That's 1 minute trading. Now the only exception to this would be what? POT. Yes, Steve, when a 1 minute wave gets to the top and it hooks back, if I've got red trend bars and I'm trading POT, pieces of 10, then I would exit there. See, this is your RAS. This is what you got to go through. So a lot of you, it's not that they're trick questions. It's just the way I present it and ask, your RAS gets confused. It goes with what it knows. And this is why you have to always say, what am I trading? What time period am I trading when I sit down on the chart? Am I trading at convergence to convergence, or am I, 10-minute levels, am I trading pieces of 10? It's not relevant when the 1 minute wave comes to an end until it's the end with the other waves. Just like we talked about resistance and support from 4 hour to 30 minute, from 15 minute to 1 minute. This is waveology. This is understanding, and the only way you're going to succeed, I don't care whether you're trading with me or as a old paradigm trader, you must understand waveology. You must understand the implications and be able to do multiple time frame analysis. We just give you a 10,000% advantage because we can show you the multiple time frame analysis all at once in your tab 29. 30 minute, 10 minute, 1 minute. 4 hour, 30 minute, 10 minute. Right? So we give you the ability to do this that others have to spend years getting the eyes to be able to look at 4 charts at once. You don't have to do that. You've got 1 chart. When you get down to it, when you get down to the execution, you got 1 chart. And it's got all of these down here. The waves have been processed and looked at, and you've got all the multiple time frame analysis you need right here. You've got an intraday support and resistance system. You can determine whether you want to trade a 30-minute wave or a 10-minute wave. And so it'll tell you what to take action on down here. And the 1-minute wave will be the confirming action or the confirming point. Uh-oh. Oh, okay. Whew. I just realized I didn't hit the record button, but auto record is on. Whew. I'm going to have some angry people at me. So don't let your RAS sucker you into this because it's a trend line at the top and we're hitting a point, which very well may be a 1-minute extreme. Remember earlier I talked about why did you exit that trade? Oh, it hit the 1-minute extreme. That's no reason to exit a 30-minute trade or a 10-minute trade unless the 1-minute extreme is the 10-minute extreme, unless the 1-minute extreme is the 10-minute and the 30-minute extreme. Other than that, let it hit. Who cares? Yeah, you're going to have pullback from it. Who cares? You're trading this all the way up until it is going to be a 30-minute top or a 10-minute top. Or you're trading pieces of 10 for which you would, as you're down below, as your 1-minute wave cycles, you are exiting at the top. But you're jumping right back in at the next bottom. And when price comes down and hooks back, you're back in this trade here. All you did was prevent the erosion, which is a pretty big thing. I don't want to mean like that's all that was done. So pieces of 10, that would be an exit. So cycle your RAS. Know what it is you're trading. And, this past week I talked to a few traders. That is a decision, what you're trading, and then what you're doing for that inside. You can't start off saying, oh, I'm going to trade harmonic wave convergence, and then when, convergence to convergence, and then you're having a pullback, and all of a sudden you're going to switch to pieces of 10. Can't do that. You can't make decisions on the fly. You have to trade like a robot. So I know in advance, oh, this is a 30-minute convergence. I'm going to trade the first 10-minute wave as pieces of 10. After that, it's convergence to convergence, and I will have some level of stop movement as I'm proceeding towards that target. Nothing too aggressive, but I will have some form of stop. That's where we'll segue into the haul on Thursday night. Any questions about anything we covered today? Good review for some, good first time for some people. All to pound your subconscious memory. We got to expand that RAS. All right, so appreciate you carving out some time. Most of you hung around the entire time. I didn't say any drop-offs. I appreciate that. That's strong commitment. And we'll have a good discussion Thursday night on the haul. That being the case, I will see you in, what's today? Tuesday? I'll see you about 36 hours from now or so. Is that right? Wednesday morning? No.
Yeah, something like that. Whatever. See you in Facebook land. In the meantime, start posting stuff, setups, trades, participate if you haven't yet. If you're brand new, take a deep breath. You're going to get through it. It's overwhelming. We'll get you there. Remember, life can be short. For those people you care and love, let them know you care and love them. I love you guys. See you Thursday.